1 week away from the national budget. Will the taxpayer have to fork out more to improve government coffers, or will we see a convincing move to cut government spending? Investors, too, will be keenly watching this budget. Intellidex emerging market economist and researcher Peter Attard-Montalto joins us from London via Skype. For more on this, Peter, thanks indeed for talking to us. Let's start with tax. We are anywhere between 50 and 60 billion rand under target at the last check, Peter. And one wonders if that will be hiked, or will the taxpayer come to rescue in any other form?
Good evening. Well, I think the really important thing about the budget is going to be, where you want to get back to. I think we have to remember that growth is being revised significantly down since the MTBPS in October. That creates an even bigger hole of around an extra 30 billion that needs to be filled. And I think, you can sort of, if you like, get the fiscal path back to where we were at the MTBPS, which will require quite significant measures on the revenue side, including tax. But going any further really is actually very hard. And actually, there are much bigger cuts that are needed in the long term to actually reach back to a sustainable position. But no, we easily need some 20-odd billion or more of revenue increases this time around just to get back to where the MTBPS path was.
But is that going to come out of consumers' pockets in terms of taxes, you think?
Well, yeah, it has to definitely come from somewhere, and the option that's being discussed widely, of course, is VAT. VAT is a relatively logistically easy price to hike, but obviously an extremely difficult tax politically to collect. Remember the ginormous fallout that happened in 2008 when it was announced. They had to then raise welfare grants by above inflation. There were new zero-rated items that had to be added in. So the political fallout is huge. The much easier way, I think, and the more likely way to raise quite a lot of this money is allowing inflation erosion of brackets, and therefore people will fall into maybe slightly higher tax brackets, or you'll see basically paying more away, if you like, below the surface in a more stealthy way is a more likely way of doing it.
Let's tackle government spending for a moment. I mean, the elephant in the room is this public sector wage bill. I think about 35% or so of government spending goes on this wage bill. I don't suppose you'll hear anything clear on that front in the budget speech, would you?
Well, this is the real challenge of what's in the budget document versus what's in the speech on public sector wages. Now, there have been a number of meetings between the government and public sector unions on the wage bill in very general terms, but there have been no negotiations at all, and Kazatu in particular has remained very firm on there being no wage freezes for lower incomes civil servants. And until this really enters the bargaining council, it's actually impossible really to credibly put anything in the budget, I think. I think that's the view that will come out in the numbers, i.e. nothing particularly penciled in the numbers. Now, what happens in the speech and what the minister says is another matter. I think he may well stick it to the unions somewhat, or he may well see some sort of bombastic push onto the unions around the public sector wage issue. But ultimately for the unions and for markets, unless there's actual concrete action, which is ultimately start of the negotiations, then this doesn't really hold much credibility.
Peter, finally, I mean, just this afternoon, the Energy Minister, Gwede Mantashe, is saying that mining royalties could be used for this envisaged wealth fund that the President spoke about last week. What's your take on that?
So this just seems like a completely bizarre idea, right? In and of itself, as the normal conception of a sovereign wealth fund. But I think we have to view this much more as a political animal. There is a very long-term trend to much higher free carry for the state, I think, in mining royalties coming from the mining sector. We saw the draft Upstream Petroleum Resource Development Bill that came out on Christmas Eve mention the Sovereign Wealth Fund and mention free carry as well. And I think this is the conception of taking a lot larger stake of money and putting that somewhere. Now, the problem is this should really go into the fiscus, and it should be used for investments in particular. Side pocketing it off into a sovereign wealth fund, I think, just opens doors for future state capture. But at the moment, and this obviously process of upstream petroleum development is a extremely long one, 10 years plus of offshore gas, they'll be sitting only with about 9.2 billion or so projected revenues for the next fiscal year, which is not really a sizable amount to play with in anything that would be calling itself a sovereign wealth fund.
Okay, thanks very much indeed. Peter Attard-Montalto there from Intellidex. We wait. In a week's time, we'll see those budget numbers. Just a quick